The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you enjoyed the event last night with the Republican debate on CNN. That was a good stretch from, 6:30 to 11? Is that what that was? Mr. Trump, always entertaining. It's good to see him up there with his looks like he had a new hairdo, actually. I don't know if you guys noticed that. I'm sure everyone watched this thing. So how does that affect what we're going to talk about today? Really doesn't. I think, to be honest with you, Trump becoming president, if that starts to lean, I'm sorry, I shouldn't have said that. If it starts to really lean that way, that's, some of the things he said, that in itself could be a little fundamentally scary for the marketplace, because that's some very unknown stuff he talks about sometimes. So we'll see. We're way away from anything getting close to that. But let's talk about the S&Ps first and foremost, because we've obviously had a pretty big reversal here on what we were doing on the downside, but we're coming up into now. We talked yesterday about 23 into 32, 2023 into 2032 being a little collection area possible. Take a shot at a short on a retracement here, and obviously that was blown through like there's no tomorrow. I actually got stopped out of that, and we talk about when we're doing some short-term trading, trying to pick some battles on some inflection points. And if it doesn't work out, it doesn't work out. This is one that really kind of ran past all inflection points that I thought it was going to go. So when that happens, you have to just sit tight and kind of wait and see. And that's one of the things that is really hard to do as a trader. It's like, okay, you took a hit and you can't get back on the field and start trying to work out of it. One of the hardest things to do too, and is extremely difficult mentally to do, is take a losing position, get stopped out, and then reverse it. I mean, if you guys can do that efficiently, psychologically, that's a tough one for me to deal with. But I kind of sat on the sidelines after this run-up yesterday. And the neat thing is that I want to show you the action. We talked about this, 21, 22, 23 up into 2032. And when we got past that area, that's where I took a little hit, and we came back. And this is a really good example of kind of former resistance now acting as support. So we blew through it, came back, and this is what I was talking about a couple of minutes ago, is it's very difficult to reverse the position. Now, what do you, from getting stopped out to possibly using that area that you got stopped out to use as support to go long? I don't advise that right now, because I'm still looking at our situation here that rolled over. We're going to have some, and let's just see how much we're up this morning. We're up about 8 points on the S&P. So, what's going on right now is, we still have we had our short-term breath just kind of wickedly cross yesterday morning, actually. Actually, what was that? Yeah, let's see. Yeah, well, we had it obviously cross in the morning from being negative for a while, and here's the 240-minute situation. We talked yesterday about these yellow areas on our odometers too, but what I want to kind of fall back to is really, our long-term breath kind of rolled over, and this daily, if we look at it, we were in negative territory. We caught some good shorts there because we were in a kind of a low VIX environment when we had rallied before. Back up in the November 9th area. All right. So as we had kind of cratered there for a while, for about a week, one of the indications that we talked about yesterday is that kind of yellow area getting populated on our speed dial. So those are great kind of hit the target takeoff opportunities and then waiting patiently until we kind of rally back up into new resistance areas a lot of times. And then when we cross back over, and we kind of went into long situations on November 18th on our daily. And I'm kind of using the daily because, as the VIX kind of starts increasing, we kind of want to scale down to a possible lower time frame on this. And we looked at the middle ground evaporating here. We talked about that getting into the week of December 5th, and then we had that crossover again. So we don't exactly, in my opinion, and let me just go to the statistics here. We've got 18.2% now new boxes attempting to appear on the daily below. We're going to have some things convert over today, but in my opinion, we've kind of done this, and we've got a huge announcement today, by all means. That's something I think we're going to have it's not I think. There's going to be a lot of positions changing hands on a day like today. This is kind of an historic day. It's basically a decade of low interest rates. And when we have something, an interest rate hike, which I think is probably 100% chance here, what's the market going to do thereafter? We're going to have to continue to take a look at the bonds and the dollar. The dollar, and we're going to get back to that S&P in just a second to try to complete that conversation. But as we look at the dollar, this is our March contract. We kind of poked our head above this 98.04 yesterday, that weekly unfair low. And we still got a little resistance here on our daily. So we've got kind of a DMZ up there. In my opinion, I think the dollar is going to continue to go north here. And I think you've got to be looking to really get on the long side of the fence here with the dollar, as now we're getting back up into that balanced area again. And you can, in my opinion, you can use that 98 with a little bit of noise factor below to still look at this from the long side. So, let's go back to let's go to the notes really quick, and then let's go back to the S&Ps. The market has generally just become infatuated, addicted to low rates. So we had a reversal in this 10-year, and I was trying to buy support again on the 126.23 area. I got stopped out of that trade, and you definitely need to, wait patiently, in my opinion, for this announcement to come out and let the action happen, and then trade the reaction if you're day trading. A lot of times the initial reactions are not exactly the way these things settle out. So getting back above 126.01 after the shakeout of whatever noise happens, they may say so many, make so many dovish comments that, these notes and bonds start to catch a bid again. So you have to worry about that. It's not like, okay, they're going to raise rates and you start shorting treasuries. That's already baked in. So that breakout was a little disturbing, that to me personally, that it reversed like that. So we got a lot of herky jerky action here, and I'm going to go back to the S&Ps. And we're going to kind of finish this. So even though, we've had them. What has this run been from? 1980 and some change up into, good God, what did we reach already this morning? 2050. So we've had in like 48 hours, we've had a 80-point move up from lows to highs, 70 point. Telling somebody from a desk there. So, what do you do with this now? In my opinion, you've got to be really willing, considering that those long-term breaths and our daily breaths will more than likely still stay negative. You've got a really, really good inflection point here to start trying to pick this again at 2057 on the short side. So, how am I looking at this from a day trading standpoint? I'm actually putting some offers out there around that inflection point in that neighborhood, kind of scaling into that, and at the same time putting some stops above. If they, again, I think the foregone conclusion is quarter point raise, but the comments are what they're really going to focus on. So And that's going to take a while to really kind of digest that. So I'm hoping that we get some euphoria more so. And this is kind of a waiting game. I don't think you have a lot of leverage here right now during the day unless you want to scale down into really lower time frames, even, 60-minute and sub 60-minute. But, this is the big number. Just yesterday, that 2021 into 2032 was kind of a range there. 2057 is going to be your next big, powerful number on the S&Ps. So, it might be a day where you just kind of take it easy until after the announcement, because there's going to be a lot of position adjustment intraday. So long-term, guys, I'm still not convinced that we are, reversing and everything's going to be okay. I just think you need to be aware of on a closing basis if we close above 2057. So that would, and the breadth actually turning positive at the same time, that would be kind of damning for the shorts. All right. So as we finish with that, and if we have any questions on that at all, please throw them in the den and please call in. On a day like today, by the way, on some of these stocks, I mean, there may be really good opportunities to look at very strong stocks, very weak stocks relative to how the market's acted if you're trading underlying instruments of the S&P 500. So in this move up, before we get into some of the other usual suspects, in this move up, I might want to take a look at my custom sorts, and I might want to see, what's been in a downtrend and sitting at resistance right now. And if I hit that, I'll see those particular instruments. And if I want to see stocks that really have been not cooperating for the most part with some of these moves up, and I can find the ones that are really strong downtrend stocks, there's still a lot of these on the board. I mean, even as this particular rally has happened of 75 points in the last 48 hours, it kind of clarifies, what's really the batch of or basket of stocks that really haven't been cooperating with the move up. And you can kind of see these pretty clearly. And you can go into the ETF section on the scanner and really find the sector really quick. I'm going to go to my daily here and find out, what's really in the cellar on the whole as far as the breadth of that sector being the one that just really hasn't been, saying, hey, everything's going to be rosy and we're going to all go to the promised land together. The XLI stocks have been, just to name a few of these ETFs have really, and there's some weak stocks in here and ones that have been weak the past couple of days. We're going to talk about this a little bit more after we get back. We're going to talk about gold, a couple of the usual suspects. But we're going to get into some stock plays after that.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Had a little question about Apple. And we talked about Apple before. We talked about this 112 area, which was 112.5, 112, which was a big area. And we're showing our weekly right now. And I'm going into the scanner really quick, and I'm going to go to Apple. I want to talk about crude oil, Al, to state it properly. I want to talk about that right after Apple, but let's just cover Apple. So, again, it's showing 1 here on our daily. So we're starting to break down, getting below daily profiles. But let's just look at our situation here. We've got the POC 112.48. We've got the on-fill on the daily at 112.8. Now remember that 112 to 112.5. Remember on wide profiles. Let me state that again. On relatively wide profiles, and this is a profile to this is an epically wide profile from 104.29 up into 128.87. That is, good Lord, what is that? 25% height of the box relative to the price of the entire instrument. This is massive. All right. So on profiles like that, you got kind of the POC, and remember, the definition of the POC is the mode of that bell curve analysis. All right. So this is the most well-traveled area, and this is where things kind of fall off one side or the other, and can be used as support and resistance. So keeping that in mind, what's happened recently. And by the way, our programmers are just really doing all-nighters right now to get this stock chart in here for you before they leave for the holidays. So the gentleman that called in yesterday, that's going to hold true. And I'm doing all the education on how to make the most amount of points with all this information that you'll have access to. But let's go back to Apple. Let's just look at the chart really quick and kind of look at the price action relative to all this. So And if you go into the scanner and you do a custom sort and you look at breakdowns, Apple's right there, right? Okay, so that's kind of cool that you can, verify. Well, if you're looking for instruments ahead of time, breakdowns, and you can go in here and look at what is the definition code-wise in English of what's going on here. Apple's on that list, and you can also again kind of see what's going on here. But let's go to the chart really quick. This is our weekly view. So as we looked at this POC, look how relevant this thing is. So as with the wide profile, this becomes more and more the top of the hill, kind of rolling down one side or the other. And if you can't get through the top of the hill, you're going to kind of use that as a ricochet situation. And when you pierce it, we get some really decent moves one way or the other. This is our long-term weekly, so we've used it as support before. Now, obviously, some fundamental news out there from a big, bank, or I forgot who made the announcement that the sales are going to start to slow down. The action yesterday, and again, this is yesterday's action. This is, by the way, we've got pre-market. We're calculating all our levels here. We've kind of jumped ahead of e-signal with all this. So pre-market, we're trading 111.14 right now. Yesterday's closed 110.49. So now, in my opinion, even though Apple has pulled back a little bit, 112 to 150 is going to be something you're going to have to pay attention to now, as we talked about that may act as support, as it has acted as support before. The fundamental news kind of caused that to pierce. Now what do you do? I mean, we could literally, and again, the action on Apple hasn't been good relative to the S&Ps the last, 48 hours or so. I think you got to sit tight here on the buy side, and you either got to wait for us to get a close back above on a weekly, above 112.5, or you wait patiently until we can get down to 104.29. Now, guys who are sitting there long Apple, I know you're going, well, Jesus, John, what, are you saying I should get out of this right now? Your time horizons and your kind of investment plan, I don't know what everybody's got a different threshold for pain and appetite for risk. As a trader, I'm saying that right now it may not be a bad idea to sit on the sidelines, right? From an investment standpoint, your time frames, this is kind of up to you, but getting a weekly close again above 112.50, I think this thing is really acting weird relative to what the market's done with this snapback rally. Obviously, we've got a big report today, but I really think that we could actually dive back into 104.29, put a gun to my head, and that's where you should wait for on this thing. Kind of showing itself right now, and that's my take on Apple. But we're gonna look at crude oil immediately when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We finished up with Apple. I hope that made some sense to some folks. As we look at natural gas, we're going to hit crude oil in just a second. As I'm just trying to, I got a zillion things on my screen here. Apologize. Natural gas. Ooh, this is the front month contract, and this is just an incredibly good example of things on their lows go lower, and doubling down on things is, if you guys are stuck in this long on an investor standpoint, I feel for you. I've been there. But we try to stay away from things like that by really taking an attitude when we start breaking below profiles. And I just want to kind of revisit this. When we do these weekly closes below weekly profiles and they coincide with these daily profiles, and I'm going to go back to my scanner for a second here, and I'm going to look at this future section, and I don't like people telling me, hey, you should have done this before. It's like, okay, man, I get it. But I'm just going through a little education process here. When we look at this, we want to always try to block out one side of the marketplace and know when it's okay to kind of get back in the water when we've blocked out that one side of the marketplace. And on this particular product, breaching the 242 area on the weekly, which coincides with the 241, I guess, on the daily. I'll round that off. It was okay to be short, not okay to be long, right? And we haven't really had any reasons on a long-term basis to change that thought process. There's been no new, hints of anything as this thing's been scaling down. And we still don't have any new profiles attempting to appear on this natural gas product. I mean, the fundamentals don't help this situation right now, but the technicals are pretty clear and clean on this natural gas product. I mean, the 240s, it's been, I'll just kind of, paint this picture for you too. We haven't even had any breakage of what we call our regulator going down a time frame off the long term. The 240s haven't even shown any hints of even getting above unfair highs on the regulator profiles. So, it's still not the case. I mean, can you catch a bottom down here and try to get heavy and catch everything back? Yeah, that's a very dangerous game to be playing. So natural gas, we have to wait patiently to try to look at some new inflection points on the long term whenever they appear, to use that as a kind of a foundation to orient stops. I mean, that's the key to trading, is playing defense. The upside, a lot of times these profiles will kind of let you stay in these trades if they develop higher. But, you just got to be willing to just wait patiently on things like this. It's hard to do if you're sitting in front of these screens. I understand that more than anybody else. We're going to go to crude oil, Al, really quick. The U.S. is going to start pumping some more oil out of the ground. There's no doubt about that. I don't keep up with all the minute details of the crude oil scene, but the good news is this is our daily, and I'm gonna go to our weekly really quick. There's no new foundation trying to show on the weekly yet, but I'm gonna go to the scanner. I'm gonna pull up crude oil really quick. WTI, there we go. All right, so this new box attempting to appear started happening. Now we've got it in force. Here's our profiles. So there's the level of the market there. All right, so there's an inflection point at 39.01. There's one down at 36.02. We don't have a terribly wide profile, so remember that POC is not going to be, a big deal. So it's not a wide profile. It's not declaring by profile definition, I guess, that we're going to have a lot of volatility. All right, it's just, okay, we came off the bottom, we got a new floor area. The resistance area now is 39.01. So instead of trying to back the truck up and buy this thing, I'm still looking at the long-term trends down, 39.01 sitting there. I hope we get a new profile in the weekly or attempting to appear while this is all happening. But the resistance is 39.01, and that's what I think you more than likely would patiently wait for. Any crude oil news would obviously fundamentally would change the scene there. Okay, somebody asked me a question from a desk here. Here we go. So that's the situation on crude oil. I'm not a big fan of completely buying this right now, but 36.02. If you're gonna attempt to buy this, you've got some support there, and you can orient stops below. Thank goodness. All right, so let me read the DIN here. All righty, nothing there. Remember, guys, if you want to call in locally, 877-927-6648. Internationally, 727-445-1044. All righty. Let's take a look at the XLY. This is one that I've really picked out that maybe kind of the worm is turning on this one. Even though we've been up in the stratosphere on this particular discretionary section, the main spider ETF, the XLY, the action yesterday, man, I love it. I mean, we talked about waiting until we got back into 79.43. We kind of got up there and then did a little bit of a reversal. I love the way this thing is acting on the short side in the short term. And we're going to take a look at Amazon, because this what is this, 11 or 12% of this product right now. I like this because Amazon's kind of got a new profile up here. All right. And we've got some resistance now we got to deal with. We got overhanging supply finally in Amazon. And, this is just something I just continue to not understand the business model. You know, I mean, it breaks even. That's what this company does. It breaks even. And Jeff Bezos is a zillionaire because of that. But anyway, so the XOY, this is a big component of the XOY. And right now, you got that big weekly overhanging supply. You've also got a daily that you got back down in the balanced area. And, you know, I love the way this thing is acting. I think this, you know, could be a little bit of a turnaround in Amazon. That would obviously help the XOY continue to drift lower. I don't know if this is going to be a scary trade relative to the Fed announcement situation there. So, you know, I think you're looking pretty good on the XOY from the short side, actually. Finally. All righty. We got to hit gold really quick. Obviously, this is the metal du jour. So, weekly, we talked about this 1060 area. We talked about selling breakdowns below there. We've kind of seen it as support. I mean, it's kind of nice how these profiles work. I'll go into the scanner. You can get the same information. You can get the same information. Let me pop this up here. There's God, why do I always? I know where these things are. I have a hard time finding them. Short-term memory gone. There we go. So let's look at the landscape here. There's that floor at 1060. All right. There's the level of the market real time. God, I can't wait till these charts are in here. So you can play around with this for long. You got to call it quits below 1060. So this past week we've reached a low of 1057, 1058. That's the noise level around long-term profiles. But you know, dollar, in my opinion, gonna not crater, hang in there. That doesn't bode well for gold. Here's the daily situation. Still got that big resistance area up around 1090. And by the way, now that's super resistance because you've got the 1090 area and you've got the POC on this weekly profile, which we got to pay attention to, 1089. All right. So that's the situation on gold. And you short-term guys, you know, you got 1072 if you want to play around with this even shorter term. We're kind of in that area right now. And then you've got targets below, obviously, 1060. So that's the situation on gold. Oh, my goodness. Silver. All right. A lot of guys in the room trade silver, so we're going to take a look at this. Again, you know, 14, 26, 27 is going to be resistance on this. I'm not a big fan of buying silver or gold, obviously, right now. We do have some, obviously, some silver breaking out on the short term. But again, I think, you know, these are just kind of ways to whack this thing when it pops its head up. That's my slant on it. All right. So last thing we're going to look at here on the kind of hardcore commodity scene is jam beans. Let's just take a look at this. All right. So, you know, this type of action, I mean, I know we've got an inflection point sitting down here and the price is in that general vicinity. And we're kind of bouncing a little bit off here, but you want to see these things get away from these inflection points. Crowding it and just settling down into it is a setup usually for another dive south. So remember that. I mean, you watch this show, I have not been a proponent of buying beans, and we talked about that last, you know, level of breakout and getting back up into 907. We hit it pretty much to the tick and backed off. I think we can easily revisit the 852 area on jam beans if you're trading them. They've kind of sucked the volatility out of this thing again. So, all righty. Okay, let me hit a couple of currencies here, and let me start this server. Pull this up. You know, I love the cloud. I mean, can you not? I mean, you have to be willing to embrace new technology. You can get a space on a server, put everything on it, access it remotely, and basically take advantage of an insane killer machine that someone else takes care of. And this thing's, I think one of these servers that we use just go a little deeper into this, is it's like a 12 or 16 Xeon Intel chip daisy chained on these. It's incredible, the power. And we run all of our servers for the scanner off of this type of architecture. So here's the Canadian dollar. I just wanted to hit this really quick. We talked about things on their highs go higher, things on lows go lower, and relative to the dollar getting weak the other day, the Canadian dollar just kind of stayed on a shelf up, like on the high plains area. I mean, it was incredible. And Tom and I were talking about this. It's like, gee, that was around the 136 area. Now we've climbed a new high. It's almost to 138. And, this thing, even though there's an inflection point up here and I'm going to go into our scanner really quick and show this. This is really cool to be able to access this so quick. And I like, I don't show a lot of my own custom portfolios in here, but you can set up your own usual suspects kind of list, if you will, and might make things easier for you. Here's that unfair high 137.811. There's a level of the market, but on a relative strength standpoint, every time the dollar gets stronger, this thing gets weaker. Every time the dollar gets weaker, this thing just kind of, stays on a, hey, I'm just waiting. So I'm not a big fan of shorting this. This profile obviously is super, super big relative to the price of the instrument. This is a daily profile. So what do you do with this? I think you have to actually say, you know what, we've got some targets in place now. You've got to at least take off half your position relative to what happened yesterday, that new profile attempting to appear. Now it's in force. Relative strength basis, not a fan of shorting this. Taking some off the table, huge fan of it, and a wait and see situation. So, the dollar could get messed up today after the announcement, and this product could come off. So, I'm a fan of taking off some weight and putting a trailing stop in on the rest on this one. Let me read it then. Alrighty. Euro, hadn't talked about that in a while. Still waiting for this thing to get south of 109 again. Here's the weekly. Yeah, I don't like how this thing's kind of churning around above 109. It's awful. It's very bad for guys we pay in Europe too. So they don't like this thing getting stronger. So. Still waiting for a weekly close to happen below 109. They're going to just hammer this thing from the short side. I love this trade. I've loved it short from 135.52, by the way. How long ago was that? So we've been talking about shorting the euro on every chance known to man since July 2014. A year and a half ago. Long-term slant. Hadn't changed. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Just to recap what we covered earlier for guys who are joining the den late. S&Ps, we got a big number at 2057. I personally got stopped out of that massive run yesterday above 2032. But we've got a good level here. If you guys can wait, probably going to be a waiting game until after that announcement today. There's no telling what this thing could do intraday. It could be all over the place, especially right before it. You guys know that. If you're doing some day trading, I remember always trade the reaction on situations like that instead of the action. I'm going to go to the NASDAQ really quick because it's interesting how we've got some really coincidental type resistance areas on a kind of a percent move situation. We've got 46.48 sitting there on the NASDAQ as pretty decent resistance. So that's going to be an area I think you can kind of lean on the short side. We have some conversions starting to happen on the daily, which is not good, to be honest with you. For shorts, 17.8% of the stocks in the S&P 500 are starting to form demand areas down below now. So again, I think it's wait for the opening, wait for the announcement, trade the reaction, and that big inflection point up top. If we get the daily actually converted over to positive, we got a big middle ground still sitting here on the daily breadth on our task profiles. But all things considered, 46.48 has resistance on the NASDAQ and 2057 on the S&P March contract. So, all right. going to look at my favorite stock, IBM. All right, so pretty big day yesterday. This is what's going on right now. We're trading 139 pre-market. So here's the long-term weekly on IBM. So, I've been a big fan of selling resistance on this stock all the way down whenever you can get some rallies in it. Right now, I got a couple emails about this. A lot of this stock is still in everybody's portfolio, it seems like. 135.95, got to get breakdowns below there to get really heavy on the short side again, or get rallies up into 140.12. Okay. Next stop resistance on this one above that's 146.70. If you guys are long and you're trying to play around with this, those are the target areas on this particular instrument. And if I go into my scanner, I can type this in really quick, and I can show these levels. It's been in a downtrend in 28 weeks by definition, by that error and that number there. Here's our profile situation. There's that 140.12, and there's that 146.70. So those are kind of wishful thinkings for longs, and you can pay attention to that. Remember, hopefully this thing tells the story as much as it can for you. We're also putting before Friday, getting a snapshot chart put in here. It'll be currencies, futures, and S&P 500 first. We've got to do a lot of things to make that happen, so it's going to happen. Okay. All right, we got about 30 seconds here, and I'm going to go back to the. Dang on it! What did I do? Whew. Okay. We're going to go back to the dollar really, really quick. We're looking at the March contract here. Again, volatility today is going to be massive on the treasuries, the S&P 500s, and this dollar. So this is what we're looking at with the dollar. After the announcement, if we can hang tight up there, I'm still looking at stops below 98 on there, playing defense on this and trying to stay at least above and above the bottom of these profiles on the long term. Guys, you've been great. Stay tuned for Larry and all the other guests on TFNN as the day progresses. We'll pick it up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.